At Paragon, we've always been known for our growth portfolios, and that's what we've got a lot of press for and a lot of write-ups on. But back in 2001, we were in the midst of a really bad bear market. From 2000 to 2002, it was just ugly. And in the middle of that, in late 2001, there were the terrorist attacks. And those terrorist attacks pushed a lot of investors right over the edge as far as they were scared to death because they didn't know if there was going to be another attack somewhere else, and they didn't know what that would do to the markets. And so as a result, people were looking for really conservative options. And while we'd always been more on the growth side, we took the conservative parts out of the growth portfolio and we just focused on those. Essentially what we did was we took all the bonds. So we took treasury bonds, corporate bonds, high yield bonds. We took convertible and preferred stocks. We took real estate, utilities, bank loans, all of the areas of the market that move a lot slower. And we took those and we basically built a portfolio out of those. And so that was our universe for managed income. And essentially each of those categories was put either on a buy or a sell. So we built models for each one of those categories, and it would be either on a buy or a sell. And if all of those categories were on a buy, we would own a little bit of each of those. If some of them were on a sell, then we would just own the ones that were currently on a buy. And so what you wind up with is a diversified portfolio. It's all using conservative sectors, but it's really dynamic in that it's really made out of the conservative sectors that are working. So you're not just pigeonholed with bonds or real estate. You're actually able to use all conservative sectors from the different categories. The purpose of managed income, or its mission, I guess you could say, is number one, don't lose money, and number two, to generate a return in the range of 6 to 9%. And that's what our target is. And obviously we can't guarantee that, but that's what we're managing for, and that's what we're trying to accomplish. With managed income, it's all model based, just like all of our systems are. And each one of the categories has its own model, and that model is either on a buy or a sell. So as long as the model's on a buy, we're going to continue to own that category. As soon as the model that applies to that category goes on a sell, we're going to sell that category. So at any point in time, we might own all of those different areas of the market, or we might only own 2 or 3 of them. It just depends on what the models are doing and what's on a buy versus what's on a sell.